Hello everyone, welcome to Educare 247. This is the lecture 7 of revision series for SEBI graded 2020-21. In our 7th lecture, we'll be talking about MCQs of ratio analysis, and this topic is the part of commerce and accountancy syllabus. The whole series will help you to prepare for SEBI grade A examination. You can subscribe to our channel for further updates about this series. Ratio analysis is the part of commerce and accountancy syllabus. Many students are asking at what extent they have to prepare for these topics, especially those who are not from the commerce background. So in my understanding, SEBI is going to ask a question on generic nature because you don't have to write the exam for CA or BCom or MCom. You have to give the exam for generic post. So you have to prepare a generic understanding about this topic. You don't have to go in so much detail. The first question is, ratio analysis is more useful to whom? The answer is analyst outside the company. Let us understand the ratio analysis. It is a comparison of line items in a financial statement of a business. So basically, it is an in-depth analysis of a financial statement. It used to evaluate a number of issues with an entity like liquidity, efficiency of operation, and profitability. It is more useful to the analyst outside of a business because for them, it's a primary source of information about an organization. Those who are inside the organization, they already have access to more detailed operational information about the organization, so they may not be needing that, but outside analysts will rely on this ratio analysis. Investor and analyst use this analysis to evaluate the financial health of a company and how company is going to perform in a future. So basically it is overall company's future prospect analysis as well. In examination it can be asked with the help of ratio analysis what you can get. So basically you can get about liquidity information, efficiency of operation information, profitability information, their debt information, short term debt and long term debt as well. So these kind of questions can be asked from the ratio analysis. The second question is, when the concept of ratio is defined with respect to items shown in the financial statements is termed as, the answer is accounting ratio. Don't get confused, though we take information from the financial statement, it will not be called as financial ratio, it will be called as accounting ratio. So it gets confusing in the examination, please remember this point. The next question is, which of the following ratios give information about short-term debt of a company? The answer is liquidity ratios. Let us understand the liquidity ratios. Basically, it measures a company's ability to pay off its short-term debt using company's current and quick asset. So it is about short-term debts. These ratios include current ratio, quick ratio, and working capital ratio. This point is very important. In examination, it can be asked which of the following is the part of liquidity ratios. So you have to remember that is quick ratio, current ratio, and working capital ratio. Let us understand the solvency ratio. It is also called financial leverage ratios. Basically, it compares a company's debt level with its asset, equity, and earning, and it evaluates how company will survive in a long term. So it is very important. It is about long term debt. So basically, solvency ratio give information about the long term debt and liquidity ratios gives information about the short term debt. So that is the basic difference. Solvency ratio include debt equity ratio, debt asset ratio, interest coverage ratio. So you have to remember this point also, it can be asked in the examination. Now let us understand about the profitability ratio. These ratio convey how well a company can generate profit from its operation. So basically profit margin, return on asset, return on equity, return on capital employed, and gross margin ratios are the part of profitability ratios. You have to remember this point also because it can be asked in the examination. Though we have framed just one question, but from this slide at least you can frame 4 to 5 questions. So accordingly you have to prepare. Where you have to focus, just keep in mind, and you have to prepare for those things only. Educare 247 has multiple courses for SEBI Grade A examination. We have comprehensive course for SEBI Grade A 2020. We have MCQ course for SEBI Grade A 2020. It is for paper 2. We have crash course for SEBI Grade A. It is for phase 1 and phase 2. Here paper 2, descriptive English and GA of paper 1 is covered. Here only paper 2 is covered. In comprehensive course, we have covered the complete syllabus of paper 1, paper 2, descriptive English, everything. So according to your preparation stage, you can join the courses. You can use the coupon code SEBI to get the discount on comprehensive course and crash course. There is no discount on MCQ course because it is already discounted. The next question is, which of the following ratios will be more suitable to predict earning and future performance of a company? The answer is market prospects ratios. Those who invest in equity market or shares, they analyze this ratio, and it is most commonly used ratios in fundamental analysis of a company. It includes dividend yield, PE ratio, earning per shares, dividend payout. Investors use these matrices to predict earning and the future performance of a company. So please remember these important points. It can be asked in your examination. Let us understand the efficiency ratio. It is called activity ratio. Basically, in this ratio, we evaluate how efficiently a company uses its assets and liabilities to generate sales and maximize profit. So basically, we check either company is using its assets and liabilities efficiently or not. It includes turnover ratio, inventory turnover, and days sales in inventory. So in examination, the question can be asked, turnover ratio is the part of which of the following? So answer is efficiency ratio or activity ratios. So this kind of questions can be framed by the SEBI. The next question is coverage ratio. Coverage ratio basically measure a company's ability to make the interest payment and other obligations associated with its debt. So basically coverage ratio give information about debt and interest payment about the company. It includes time interest earned ratio and debt service coverage ratio. So remember all these important points and prepare for basic thing. You don't have to go in much detail. This basic information will help you to clear the SEBI examination. Hope you have enjoyed the video. If you have enjoyed the video, like, share and comment and subscribe to Educare 247. Thank you and happy learning.